Good morning, good morning, good morning. I hope you're all doing well. It's Thursday and headed for my walk and thought I'd talk the markets with you guys. Hope things are well and you're enjoying your day as much as I am. For those who don't know me, my name is Adam Kahn and this is my half-ass channel. Not a financial planner, I'm not a lawyer, I'm not an accountant. Please use the information on this channel for entertainment purposes only and reach out to your financial planner, your accountant, or your lawyer for any financial decisions you make. I'm just a guy sharing my opinion, which might be worth very little. So really, talk to your advisors for those decisions. So I always note these guys who are super hyperbolic. I don't know if it's simply for views and building the channel or if they really believe the stuff they spew. But look at what the markets are doing after these bank failures, and the ECB announcing that they're going to raise 50 basis points, which brings in the possibility that the Fed might too. I don't know. I don't know if Powell's still concerned about the inflation. You know, they said things were going to break. They said things would be painful, and now they're getting that. So I think amazingly, they could kind of wander through it and cause a softer landing because there is enough liquidity out there that businesses and people seem to be okay. I'm sure they didn't expect the banking system to get cracked again and probably thought it would be unemployment, but it shouldn't really matter what cracks. I think you almost want to put risk back on. I saw Meta above 200. I think these things that got oversold, the money's going to rush right back in, and it's going to be a play of getting out of safety back into risk again. I mean, Google, Amazon, Facebook, Starbucks, Disney, these are all great companies that got super oversold because everybody's panicked. I see those as good opportunities, but you know, I'm looking 10 years out and I hope I'm buying good companies that continue to grow. I don't, even if they have trouble, I think their abilities to maneuver through tough economic times are better than other companies. And I don't mean the ones I pick, I just mean big, strong companies. You know, they keep saying on CNBC, how does all this stuff impact Bristol Myers, and why is their stock down or up based on all this stuff? And I couldn't agree more. I mean, they're not even in an industry that's likely impacted by interest rates. You know, like, why would Bristol Myers be down 3 or 4% on one given day simply because the Fed's raising rates or this or that? I don't know that they've moved that much. But I know AbbVie's bounced around a bit lately, and I've seen some others too. If you don't want to buy bank stocks because you see them as a little bit of high risk right now, it's understandable. There's plenty of stuff out there. And then let's talk about the housing market, because depending on the Fed's goal here, you know, they're really screwed on that regard. The housing market demand is for sure back. I see it on the front line. I also do mortgages for a living, and applications are up. Deals are beginning to close again. The buyers are getting more comfortable, understanding that the rates are higher, and they're coming to accept it. Now, they're all betting on lower rates. I don't know if I agree. I don't really disagree. It's what the bond market's indicating. But if there's demand at 6.5% or 7% loans, I don't know why I don't know why the wholesalers would just lower that, and I don't know why the Fed would feel pressure to reverse. I think the economy is handling those mortgages, higher interest rates, and higher payments. You know, I was listening to a guy talk about auto loans, and I found it very interesting. He went on, forgive me if the numbers are incorrect, because it is off of memory. He was talking about how the average car price went from $35,000 to $42,000, and the car loan went from 0% to 6 or 6.5. That altered the payment on the average car from $575 a month to $900 and something. And when he did the math, it was, a 60% increase. What he left out of the equation is, I think, 80% of the people who buy a car have a budget. Maybe they go outside of that budget. I don't know. Maybe they push their limits like they do sometimes in other things. But why do they have to buy the same car? If that payment went up 60% and they can only afford $575, I don't know what the average car is, but maybe they have to go from an Accord to a Civic. Like, I don't know. So, I don't think that means they can't buy a car. I think it just means they buy a bit of a lesser car, and I don't really see that as being that big a deal. I think people have to adjust their mindsets the same way with housing. One realtor responded to me going, well, my client could afford a $500,000 home a year ago, and now he can only afford one for $350,000. Okay, so what? So he shouldn't buy, and he should wait for that $500,000 home to come back down and potentially risk being a renter for the rest of his life? That has to be one of the dumbest answers I've ever heard. Like, I don't mean it the wrong way, and I understand the frustration, but I would like to buy things for less money than they are too. So stop trying to even make the prediction. I'm not saying anybody's wrong. Maybe they're right. I'm saying figure out your budget and stay in budget. Buy stocks, buy houses, buy collectibles. Put your money away and save it. One day you'll be really happy. If you buy a $500,000 home and make payments for 30 years, you will have a paid off home in 30 years. Maybe it's worth less than the $500,000. Maybe it's worth more. But you'd have a paid off home with whatever value it has. So I'm tired of hearing guys talking people out of doing that because they have fear of the market. And then the sales pitch of trust me because everybody else is giving you bad advice is awful, because I think they're giving bad advice if you want to know the truth. I don't think housing's going to collapse. I don't understand it. But if a loaf of bread went from $1 to $1.50, there's no reason a house didn't go from $500,000 to $750,000. Maybe things were too cheap. This disconnect of it's gonna collapse because we have a memory of 2008 that was only 15 years ago may not be correct. It is not 2008. We have a different situation. There are concerns, but I'll keep pointing to the same thing. The major difference is you don't have option arm loans that are maturing at an exorbitant pace as housings fall in 10 or 15%. You have people who could afford their payments at super low interest rates that if they're squeezed out, I think they're more likely to rent their home than sell it. It's the position I'm in, so I get it. I got in at a rate at, I don't know, either 2.75 or 3.25, like somewhere in that range. Forgive me, I don't pay that close attention to it. I just know it was cheap. And my payment is beyond low. If I felt pressure, we had to make a change, I would be renting that home out. The payment's probably half of what I would get in the rent, and I wouldn't want to lose that position. I don't understand where this mindset is of, oh, when prices come down, people are going to panic, it's going to collapse. What is going to cause it? You know, the Fed would have to raise rates to where mortgage rates are at 10 or 12%, I think, to really stop demand. And they would have to do it at a pace like they did in the beginning to shock the market again. And I don't think that's their goal. I think their goal is what Powell said, which is to slow inflation and get it down to a reasonable pace and maybe cause some unemployment, which I'm guessing if they wait a few months, you know, Meta fired more people, maybe some of the other Silicon Valley banks or companies will start letting some people go. It's quite possible you'll see the unemployment start looking where they want it, and end up exactly in the right place without much changing in the economy. If and when that happens, house prices will already be up a little. Your clients that you keep telling it's going to go down, wait for lower interest rates and will still be renting. They'll have spent that down payment on their rent. And what I find is even worse. They usually go out to dinner or go to a movie or whatever it is and spend so that when it's time to buy their house, the savings might be gone and they may not be in the position still. I hate seeing people talking people out of buying their primary residence. Investors are investors, it's different. They watch all that stuff too. But most of the people responding on emails or comments, I think these are just regular people who are getting bad advice. So, I don't know. Do what you want to do. My suggestion is live your life. Don't worry about the news and the noise, and make those financial decisions based on what you can afford. And don't worry so much about all the things they talk about. Don't let the scaredy cats scare you out. It's a mistake. I can tell you from 50 years experience. Really, relax, stay in budget, and do the right things.